Hello and welcome to another video. This will be a market review on XAUUSD, that is gold versus US dollar. So we are currently on a weekly profile, and as you can see, last week we closed bearish on gold. We opened here and dropped all the way down here, gave us that low, then we closed back in bearish. So this week, given that last week closed bearish, still on higher time frame, as you can see, we are bullish. Okay, we are interested in going higher, though there's been some kind of consolidation going on around here in this range, in this weekly time frame. So let's go to daily time frame to be able to see more. Remember, this is a top-down analysis. We just started with the higher time frame, and I will be dropping lower to have a bigger picture on what really happened and why gold dropped here. For example, last week here, as you can see, as we've seen on weekly time frame, gold dropped, and we're going to be looking at why did gold drop. So last week, let's begin here on Monday. This is Monday of last week. So I'm gonna put a vertical line here. Okay, this is Monday, and as you can see, Monday dropped all the way here. So I want us to take a look at why did it drop here, so that next time you're in a market situation, you can be able to see these signs and take advantage of them. So first thing first, we are going to point out liquidity pools, or we're going to point out PDRAs, and in this case, I'm talking about this daily fair value gap. You see this one? Yes, that one. This daily fair value gap, the one I just marked in. So before it dropped on Monday, as you can see, Friday price pushed to balance that liquidity, because this week, for example, the week before now, last week, we were going up. So the question is, if you are going up, where are we going to? This liquidity pool that was resting here, this inefficiency, price inefficiency. So once Friday came and filled that gap, so what are we looking for? Well, always Mondays are always known to be closing back in, except this one here. But in majority of Mondays, even if you go back to, let me show you. You see, for example, this Monday here, it closed back in. Let's see another Monday. You'll realize that, or this one dropped below and displaced. But in most cases, Mondays often close back in. That is if the previous week had a serious expansion like the one we had here. So the Monday that comes in, closing. But if the week did not have some serious expansion, for example, you see for example, last week we just dropped down, but we did not really have an expansion, a big one. And Monday comes in and it just goes above it all. Okay, so we had already filled this daily fair value gap, and now we are coming into Monday. So Monday, we were expecting for price to now look for inefficiency, something below if you're going to go below. But remember, over here we are not yet sure that we are going lower. Okay, it is a brand new week. But given the fact that we are now aware that we have already balanced an inefficiency here, so we look to what next? What is price interested in next? This one down here, this bullish fair value gap. So when Monday closed in and closed in bearish, as much as it did not displace below the previous day, that is now Friday, but it closed showing us interest of wanting to go lower. So our interest was to start looking for sales from Tuesday, Wednesday, until we tap into this gap. And I want to take a look at how beautiful last week we tapped and balanced this bullish fair value gap, this daily bullish fair value gap, and this is the consequent encroachment of this gap. You see how price did respect it. There's nobody violating that area. So meaning that we are very bullish. So that was what happened to last week, and as you can see, this is where we closed last week on Friday. So this week, which is yesterday, now comes in, given that we had already balanced everything here. So we are done with the we are done with the inefficiency down here. So our next question or our next target will be if we are going up, the way price has been closing back in, no displacement below here. So the question would be, where are we going to next? So the where we're going to next, the drawn liquidity is this high, the previous week high. Okay. And when you're done with the previous week high, we go to this other high, the previous, like the other month high. Okay. And when that is done, the next target will be all-time highs, which is, of course, we are going to be attacking. We already attacked this one. We are going to be attacking this one and this one. But as we are going to be attacking them, for example, we only have like 2 hours and 6 minutes for markets to close. So we are likely going to be having a bullish daily fair value gap for today. Let me close this one because we are done with it. So we are likely going to have a bullish daily fair value gap, which I expect to be filled in between tomorrow and Thursday, most likely Thursday, before we rally up again. But we have already taken liquidity from this high. So after taking liquidity from this high, that is which was done on Monday. So Tuesday is gonna come and close in. When Tuesday close in, expect Wednesday can give us some reversal into this fair value gap. Then we go up again, or Thursday is when you're gonna have that reversal, depending on the news that we have this week. So this is what is going on with the gold. So for example, this is on daily time frame. Remember, if you wanted to take trades, you've done your analysis on daily time frame like this. For example, you know that market was coming towards this fair value up here. So you position yourself now to buy. Now, which you would now start working with, for example, the hourly time frame, 15 minutes time frame, and also 5 minutes time frame or 1 minute time frame for entries. Okay, so this is a hourly time frame, and as you can see, this is the bullish daily fair value gap. You see how on Thursday last week we were able to close in, and as you can see, the price action once we tapped it, these hourly candles started closing back in, showing that showing that it is now interested in attacking the the sell side liquidity. Okay. So sorry, buy side, not sell side. This is buy side liquidity, and this is sell side. So it was I'm interested in attacking this other side of liquidity, and um, if you move into now 15 minutes time frame. So okay, for a person who doesn't have really an age, like for example the ICT, silver bullet, and so on, and you see, though majority of strategies usually have specific times that we often use to enter. So during this time, I'm using UTC plus 3, and as you can see, this is the UTC that's being used on Dubai and so on. And if you can see during this time, this was Asian. This was Asian. Yes, this was Asian, and most people don't usually trade during Asian, and or in other terms, we barely have anything. Majority of even the, like, for example, the concept I'm using here are ICT concepts. And during this time, you find that there's nothing really, there's no really entry model that you can. But generally, once you start seeing the first candle dropping in, the second one closes back in. Now you wait for price to come to any of the wicks of these candles, then you buy. So, for example, or would just decide to buy at this fair value gap down here, daily fair value gap. Then you put your stop loss under this low here. Okay, like that. Then you target up there. That will be 1 to 4 risk to reward ratio, which was met the same day. Okay, so you'd have, okay, and actually, even if you take a look, let's go back to daily time frame. Even if you take a look, even at the bearish fair value gap that price reversed on other previous week. For example, this one here, this one that I highlighted, you just sell from it, here it is. So what we do is we put our position like that, targeting what? We are targeting this other inefficiency here, and our stop loss. Now that's where we move into now hourly time frame, or maybe 15 minutes, to see where our stop loss can be well managed or kept. So for example, our stop loss in this case, because this was the gap, our stop loss in this case would have been at this gap here. I've, this is hourly time frame, so I've put the stop loss here on top of this gap here, bearish gap. As you can see, this one here, stop loss right there. Then you give it that room to breathe. Then you target the below here. That's already 1 to 5. Okay. Though this will be more of like a swing trade, because it took some time to be able to deliver that. So that will be more of a swing trade. So what I expect gold to keep doing right now is I expect us to keep attacking the liquidity that lies above, meaning that we are still bullish, and expect that today we are going to be having we're going to create a bullish fair value gap today here, this one. Then we're likely to drop either tomorrow, that is Wednesday, or Thursday, the reversal day. Then we jump up on Friday, targeting these highs. Okay. Now, remember, this week we have Red Folder News, we have NFP, if I'm not wrong. I think it's on Friday, and we also have a lot of red news. So, given that we have those news, and you've seen what Monday did, the intentions, you see how strong we closed above here. This shows that we are really interested into going higher. So, this is the quick analysis for gold. I'm going to be doing another analysis for Nasdaq. So I'm going to see you in the next video. I hope this was helpful as you plan your trades, and hope to see you in the next one. Bye.